The Indian rupee has slipped to a record low as global markets reel under the impact of the ongoing Iran war. With oil prices surging and investor sentiment turning cautious, the currency is now under significant pressure. But is this decline entirely bad for the Indian economy? Now, the rupee has fallen to an all-time low, slipping to 92.63 against the US dollar as of Tuesday closing. A key trigger has been the surge in oil prices driven by disruptions around the Strait of Hormuz, a critical global energy route. For India, which imports a majority of its energy needs, higher oil prices directly impact the currency. As import costs rise, demand for dollars increases, putting further pressure on the rupee. Now, at the same time, foreign investors have turned cautious, with capital outflows adding to the weakness in the currency. A weaker rupee has direct consequences for the economy. Imports become costlier, pushing up inflation, while Indians traveling abroad or paying in foreign currencies face higher expenses. Sectors dependent on imports, including energy and electronics, are likely to feel the pinch. However, there are some silver linings for the Indian economy. A softer currency makes Indian exports more competitive in global markets, benefiting sectors like IT services, pharmaceuticals, textiles, and engineering goods. Exporters earn more in rupee terms for every dollar, which can help boost revenues and support job creation. The depreciation can also encourage domestic production by making imported goods costlier, giving a push to make in India efforts. In addition, remittances from Indians working abroad become more valuable when converted into rupees, supporting household incomes. So while the weak rupee does pose challenges, it also offers select opportunities for growth in key sectors of the economy. For now, the outlook for the rupee will depend largely on how the Iran conflict evolves and whether oil prices stabilize. Until then, currency markets are likely to remain volatile, with global geopolitics continuing to drive the trend.